Hey, good morning. Let's go over today's trade plan. So, in the early part of the overnight session, the sell side was dominant and ES sold off down into the 1675 support, where responsive buyers stepped in and pushed the market back up towards the overnight high. Aside from that, we know that bigger picture, the Russell has been relatively weak compared to the other markets, and Russell also continued to sell off in the overnight session, got oversold, and then bounced off of larger time frame support and off of a deeply oversold condition. So, bigger picture, Russell is bearish, and that can weigh on the S&P. But so far, the S&P and Nasdaq have been continuing to balance within a range. So heading into the open, we're going to watch and see how ES responds to the 29 quarter to 31.75 initial resistance zone. If the market is truly weak, then ideally you want to see ES holding below initial resistance. And then on the downside, we are going to be cautious on taking long setups unless we are seeing clear signs of bullishness and some decent upside momentum in real time. So because the S&P and Nasdaq have just continued to balance within a range, our short-term bias continues to be fairly neutral. We are again going to give edge to the sell side below initial resistance, and technically sellers can still be active at the resistance zones above, but what we're watching to see is whether the level of bearishness that we've seen in the Russell is now going to show itself in the S&P and NQ. So if we are going to see that level of bearishness come into the S&P, then ideally you want to see it holding below initial resistance, and then on the downside we can quite easily retest the 16 to 18 initial support, and at this point we will have to exercise caution at the support zones below. And if we are heading down on continued broad market weakness and sustained downside momentum, then ES does not necessarily have to reverse off of 16 to 18. It is still valid support until broken, but we will have to be a bit more careful on the long side at this point, simply because of that bearish disconnect between the S&P and the Russell. So it will be valuable right now to keep an eye on TF. Now, TF on its own is bouncing off a pretty oversold condition, so we could get a little bit of short-term buying in that market, and we already know that the S&P is continuing to balance within a range, and if that happens, if we do start getting some larger time frame buyers active in the Russell, then perhaps we can test some higher prices in the S&P as well. So right now things are pretty mixed in the market, because of this bearish disconnect with the Russell and the level of selling that we've seen in the Russell. One would expect a move lower in the S&P as well. And that's why we're going to be careful on long setups. And as long as we are seeing signs in real time supporting continued movement lower, we'll focus on the short side at initial resistance as well as the 34.75 to 37 resistance. And that's an important zone. It's the high volume node of the recent balance. And if sellers are going to maintain control, then you want to see it holding below 34.75 to 37. A break beyond that zone would tell you that buyers are stepping in a bigger way, and it would signal strength. And from there, you could head up and test yesterday's RTH high at 42 quarter, and then the next important zone would be 43.75 to 45.75. So off the open, let's keep an eye on how ES responds to the initial resistance area, the 34.75, 37. Those two are really the important zones on the smaller time frames here. And again, ideally, ES holds below 29 quarter, 31.75. And then on the downside, we can tag 16 to 18. And if we are seeing sufficient downside momentum and the volume continues to be relatively high, then it would open the door for possibly a test of even 07.75 to 10.75, and that's still larger time frame support. And if the market's exhausted into it, then that zone can still technically provide a short-term bounce on first test, and in the event that that zone gets taken out, then we can go down 2100 quarter to 2102 quarter. So things are mixed, and we are going to have to assess the situation in real time. Sometimes these larger patterns or bigger disconnects between the markets can take more time to play out. They don't necessarily have to come back into sync right away. It can take more time, and for that reason, even though there is this larger bearish disconnect going on between the Russell and the other markets, we still have to pay close attention to what's happening in real time and then assess the real time situation. And if that lines up with the bearish case, then we can be much more active and more aggressive on the short side. But if in real time we're seeing upside momentum and we're seeing short-term strength in the Russell and even on the S&P, then we have to keep that bigger idea in mind, but make sure that we are securing good trade location on the short side and that we're not being overly aggressive and shorting at poor location. Whereas if in real time we are seeing bearish signals, then we already know that the bigger scenario, the larger time frame idea favors the short side because of the extreme weakness that we've seen recently in the Russell, and then we can get a little bit more active on the short side as long as we have those real-time signals supporting it. So if the momentum is in our favor and if the intraday bias continues to support the sell side. So those are really the main ideas. We have to be a little bit more cautious because of these mixed signs that we're seeing. S&P continuing to balance, Russell being relatively weak. Keep an eye on TF. I think it will be helpful on the day time frame today. In the S&P, let's see whether it is able to break below pre-market support, how it responds to initial resistance, 34.75 to 37. That's going to help set the bias and help us figure out which side is really dominant, and we'll take it from there.